There was this dirty secret that we all knew in the industry. Customers didn't know. It's about, don't just bury this in the ADV that somebody has to like click on a weird PDF link in the footer of your website. There probably needs to be an evolution of the way these services are priced. Publish your pricing. 68% of consumers feel more engaged and trustworthy of brands that publish their pricing. Be very open about it. Be proud of it. You know that you're a great value and there's nothing to hide. A common fear when it comes to publishing pricing is if they see how high my prices are, they won't call me, I won't get that client. That's not a client you want anyway. It gets a little bit more complicated when it comes to financial advice because yes, the 1% AUM fee is industry standard. Of course, there's a scale where the percentage will go down as the assets go up, but don't just bury this in the ADV that somebody has to like click on a weird PDF link in the footer of your website that they can't even find. Like make it easy and clear. You will close more leads this way, at least more of the right ones. I have a case study from a business that had, this is not a typo or a mistake, a 650,000% ROI by publishing their pricing in 1 month. Let me tell you that in a minute. Before I do, a couple other stats that I found in researching this, because it's something that I've thought about quite a lot. I've priced a SaaS company, which is Wealth Voice. I've priced marketing and consulting services and podcast services with Beetle Moment. I've helped other advisors and companies market their services, and it's always, so how do we publish what we're charging? How do we position this so it seems like a good value? Today, the best thing you can do as a brand is to be transparent. Anything that is shrouded decreases trust, and there is less and less patience for anything but transparency. Like the world is too public at this point for you to like hide in your business, hide your fees. But there's more to the story with the financial advisory services pricing. A standard 1% of assets under management fee, it's actually more nuanced than that. If you have larger accounts, the fees decrease. It's often like 0.5% for those high net worth and sometimes even lower when it's ultra high net worth, which makes sense, obviously. In fact, the pricing of financial advisory services is a really odd model, but it's one of those first mover things. Here's an example from another industry. When I was in the car rental business, my job from my 20s, marketing, there was this dirty secret that we all knew in the industry. Customers didn't know. It's about gas fees. You know, when you rent a car, I mean, if you even rent a car anymore, like everyone just takes Uber, but when you rent a car, you can prepay for gas. We loved it when customers did that because the margins were incredible. You would buy a full tank of gas, you probably wouldn't need to refill the full tank, and the price was marked up for the convenience of not having to worry that you'd return it half empty and then have to pay those really big fees for the refueling. So we loved gas prepay. But we did end up getting a lot of complaints about it because it was like price gouging. People aren't stupid. This is capitalism. People know that we're here to make money. If you do it in an authentic way where you're not trying to hide things, it's like showing your hands at the poker table, right? When you show your hands, especially the palms on a video, people trust you more because we're animals. You're hiding something. I don't trust you. I don't know about that. Just be open and honest about it. You want to be like, this is what the gas costs. Here's why we charge more. We're saving you the chance that you might get gouged on the price by not refilling the tank. You don't want to worry about gas. It seems expensive, but it's actually a steal because time is money and you're here to have fun, not pump gas. If that had been the messaging, we would have had a lot fewer complaints. You don't want complaints. You don't want people to feel negative about any aspect of the experience. You might make a little more revenue off of whatever the tactic is, but if people don't like the feeling, they won't come back. They might speak negatively about you to their friends. It's not good long-term. Like you always want long-term business relationships, customers, not buyers. Buyers buy from you once, customers buy from you continually or become a client that pays you AUM continually. So back to this complexity when it comes to financial advisor pricing. All-in costs are typically higher than that 1% that I mentioned. It averages actually about 1.65% according to Michael Kitces. And this is due to additional expenses like ETFs, mutual funds, transactions, and platform fees. 1.65 is a little more accurate a lot of the time. But there's all these competitive pressures, so advisors have been providing more comprehensive services, and these advisory fees often encompass financial planning, with nearly half of the fee allocated to those services. Essentially, evaluating the cost of financial advice means looking beyond a single advisory fee. You have to look at the whole picture. There's investment management, financial planning, all of this is happening, and then you're going to understand what you're receiving from a value perspective. I still think, although it seems like it's a quantitative thing, like this is a percentage and we're talking about money, there is such an emotional component to this. There's a sleeping well at night peace of mind component. There's getting a therapist out of it, like a life coach almost. Some advisors really fill that role. There probably needs to be an evolution of the way these services are priced. So then you'll see some people come out with flat fee, or in order to get more clients who are Henrys, not yet at that like $500,000, $1 million mark, flat fee or hourly consulting rates. Then we get back to the barista thing, which, look, I do have an hourly consulting rate. I do calls one-off, a few a month. They're good in their own way, but really we all have an hourly rate. We hate to admit it because you think this commoditizes you. Like Naval Ravikant talks about this, and I've been listening to his audiobook. I tweeted this out and it got literally 100,000 impressions on X. So I'll link to this in the show notes. It's like separate, but just a great rec. On Spotify Premium, in the US at least, you can listen to The Almanack of Naval Ravikant by Eric Jorgensen. Just absolutely packed full of knowledge. It's about 4-hour listen. And the one part of the book I was thinking of just now is Naval says, you think about what your hourly rate would be. Like take how much money you make a year and you can calculate an hourly rate. So think it's 5,000, think it's 1,000, whatever feels right or seems right for you. Make it higher than you think it should be. Like make it really high. And then if you're doing something that you could outsource for $100 an hour or even $500 an hour, you should probably outsource it so you can get that hour back. But this too is nuanced. I had an odd experience over the weekend. I was at a party. It was like the UT watch party. And I was talking with somebody and he's like, what were you up to today? And I said, just, tinkered around, cleaned up the house a bit, like did an errand, hit the gym. He's like, you clean your own house? Don't you pay someone to do that? It was such a snobby thing to say. Like, sure, I could pay someone to clean my house, but if I need to clean something up right now and I want it clean right now, I'll do it. I'm not above that. No one should be so above things. This goes back to the hourly rate discussion. Like you can't optimize every drop of your life in this productivity obsession. The same thing applies to business pricing. Yes, you should be careful about pricing and make sure that you have healthy margins, whether you're selling your time, your services, your product, but not to optimize it so much so that you lose sight of the general sense of, does it feel like a good value? Are my clients or customers happy? Am I happy? You should price your business in a way that makes sense for you and your target clients. Maybe there's a more creative way to price financial services that will come out soon. I'm thinking about this and I want to come up with something better than 1% AUM. All right, so I promised you that I would tell you about this special case study. There's a business I've been following. It's not in financial services, but this is illustrative for everybody. They decided to break industry norms by using priceguide.ai to show real-time price ranges on their website. And the outcome was, in just 30 days, they generated more qualified leads than the previous 4 months combined. So with a modest investment of $20 a month in this AI pricing tool, they achieved a staggering $130,000 in tracked sales. So that was an ROI of 649,900%, not a typo. Sure, it's a crazy percentage because it was coming from a lower number and it was like $20 investment. $20 to figure out the pricing to get $130,000 in additional sales just by publishing pricing and by publishing the right pricing. Let's also incorporate some insights from a fascinating study in the Journal of Product and Brand Management, which showed that consumers perceive price increases as more fair when companies disclose the increase themselves. When firms are transparent about sharing those price increases, like Netflix or Amazon Prime, they do this almost every year, right? They send you an email. We're going to continue giving you this great service or this great programming, but now it's another $10 a year or another $20 a year. People feel better about that than just being surprised by the next bill being higher. or by finding out like in the news or by some angry social media posts about the price. Like if you set the expectation and just communicate, you'll always be better off. That leads to stronger brand loyalty. It's okay to raise prices when it makes sense to you. You just have to explain why you did it and what they're going to get as a result. Really what you want when it comes to pricing is, even if it's high, especially if it's high, for people to still feel like what they got was a steal. So think about what you could add to the services you're already providing that wouldn't be difficult for you to add, but would be really valuable and make it feel so stupid to leave for that client or customer. Give them extra stuff. Another parallel is in financial markets, price transparency means making information about bid prices, ask prices, and trading quantities more accessible. And freer markets have better flows. Like, the more transparent, the better. We've seen this in the US. In your own practice, showcasing transparent pricing instead of hiding it deep in documents serves not only as an efficient way to set client expectations, but also it reinforces trust in your services. So the takeaway is publish your pricing very transparently, explain it well. You're going to have more people come through your door and more of the right people. If you lose a lead because you published your pricing, it wasn't a good lead for you in the first place. Let them leave. As a footnote, I'll give you a little insight. I've sat on different sides of these aisles. Like, I help advisors with marketing. I am a client of an advisor myself, and I've thought about this from both sides. When I think about, I was DIYing my own investments for 12 or 15 years, and I had incredible returns. Some luck, some skill, a couple really good buys in like 2016 tech. And I'm like, I could probably do better on my own. Could I though? Because I don't know what I don't know. That's the thing you really have to illustrate to these people. And yes, robos will do tax loss harvesting, and they create this feeling in their consumer, which is very strategic. It's great marketing. It's like an anxiety reduction of all you need is the software. The algorithm does all the work for you. We're just going to put you into ETFs. It's diversified. It's based on your risk portfolio intake quiz that you did, which you can always adjust anytime. But there's more to life than that. There are more event-driven needs. There are things that come up. There's inheritance, there's death, there's family things, making big purchases. There's a lot of nuance to it. And with AI, people are starting to think that maybe they could just wing this and DIY it and like have AI answer whatever questions they have. So you have to really come across as not only the expert on the quantitative and the rules and the financial planning, but as a guide and a support system. I think illustrating this through much more storytelling and case studies will continue to be very useful. Video is a great way to do this. You have to humanize it. It's just truly not enough to have a website with some information and maybe some still photos. You really need video in this day and age. It's key. Short form video is dominating the internet right now. In 2025, the advisors that pull ahead are the ones who understand content marketing, organic content. It's not about advertising. This is about showing your human side, telling your story, and demonstrating value. If you're watching this video or listening to this podcast, you're probably not new. Like, I've been doing this particular podcast since 2018. You may have been with me for a while, or maybe you are new. If so, welcome. But why do you even trust what I'm saying? Do I seem smart? You got the video, someone sent it to you from a friend? Or is it because you've been listening to me for a while and you're like, okay, she knows about these things? You build these relationships over time. The way to build these relationships online is the one-to-many broadcast. What you can accomplish on one phone call with one person is nice, and that builds a relationship with them. But if you want to get your brand out there and to grow a business, you have to take advantage of this one-to-many broadcast. Content, social media, that's it right now. I'll leave you with that. If you're enjoying the show, please send this episode to a friend. That's the only call to action. Send it to a friend, recommend it to somebody else who you think would find value here. And then, of course, you can subscribe everywhere you get your podcasts, Spotify, Apple, etc. Also, youtube.com/EmilyBinder. All the links to rate, review, subscribe, and hear the top most popular episodes of all time, a Spotify playlist, are at emilybinder.com/podcast. Thanks for listening, and I'll talk to you next time.